Welcome to our channel Money Minded Online, the podcast where we explore the best strategies, tools, and stories for making money online. Whether you're an aspiring entrepreneur, a seasoned hustler, or just curious about how to thrive in the digital economy, you're in the right place. Each week, we bring you actionable insights, inspiring interviews, and proven tactics to help you build wealth online. So sit back, take notes, and get ready to transform your future. Let's dive in.
All right, welcome everyone. Let's kick off this deep dive. And today we're going on a bit of a treasure hunt.
A treasure hunt?
Yeah, we're going to explore these four asset classes that this podcast we found is claiming are like the golden ticket to,
To what?
getting rich by 2025.
Oh, okay. So a get rich quick scheme, huh?
Well, not necessarily a scheme, but they definitely make some pretty bold claims.
I bet.
The podcast episode is called Buy These Four Assets and Never Sell, Get Rich in 2025.
Oh, okay. Catchy title.
And it piqued our curiosity. Right. So we're going to dig into it.
That's good.
They recommend Bitcoin and Ethereum,
Right.
real estate,
Classic.
stocks,
Of course.
and online businesses.
All right. Covering all the bases.
Yeah. So before we, get carried away, with these dreams of like yachts and
Private islands.
private islands, exactly.
Yeah.
Let's unpack these suggestions, see what they're all about,
Yeah, let's break it down.
see if they actually hold water,
Always a good idea.
And just a reminder to everyone listening, this is an exploration, not financial advice.
Definitely.
Always do your own research.
Absolutely.
Consider your own personal financial goals,
Of course.
before making any investment decisions.
You got it.
So, jumping right in,
Let's do it.
first up, the digital darlings.
Ah,
Bitcoin and Ethereum.
the crypto kings.
The podcast hosts are really pushing Bitcoin, as digital gold
Digital gold, huh?
because of its limited supply, right?
Yeah, I've heard that argument before.
21 million coins, that's it.
Yeah.
That's all there ever will be.
Scarcity creates value.
That's the idea, yeah. And they even cite these analysts who are predicting
Predicting what?
that Bitcoin could reach, get this, $100,000 to $250,000
Wow.
by the end of 2025.
That's quite a jump.
Can you imagine
It's hard to even fathom.
the potential return on, say, a $1,000 investment?
Well, that's the dream they're selling.
It's a pretty tempting dream.
It is, but that digital gold comparison, it's interesting.
What do you think about it?
Well, it plays on that scarcity principle, right?
Right.
The idea that limited supply plus increasing demand equals higher price.
Yeah. Basic economics.
But Bitcoin, it's not exactly like gold.
Yeah, what's the difference?
Gold's been around for centuries, right?
Yeah.
It's got this long, stable history. Bitcoin's value, it's way more volatile.
That's for sure.
It swings up and down like crazy.
It's a roller coaster.
And it's heavily influenced by things like
Like what?
market sentiment, speculation, regulatory changes,
Of course.
all sorts of things we can't really control.
So it's not as simple as, just buy and hold like with gold.
It's a different beast altogether.
Okay, so Bitcoin, it's shiny, it's potentially lucrative,
Yeah,
but it's also risky.
very risky.
Got it.
Now, what about Ethereum? What are they saying about that?
Oh, they're claiming it could reach $10,000
$10,000.
by the end of 2025
And why is that?
because of its role in, DeFi. NFTs, right?
Smart contracts.
Okay, all the buzzwords.
They're painting a pretty rosy picture
I bet they are.
of, potential gains.
It does sound promising, but we need to be careful with those buzzwords.
Oh.
Yeah, explain that.
DeFi, it aims to, revolutionize traditional finance
How so?
by building these financial applications on the blockchain,
Okay.
making things more accessible, more transparent.
Interesting.
Smart contracts.
Yeah.
They automate agreements, on the blockchain.
Oh.
Get rid of those pesky intermediaries.
So cutting out the middleman.
Exactly.
But it sounds like there are risks and challenges too, right?
Of course, DeFi, it's still early days.
Yeah.
It's facing these security hurdles, regulatory hurdles.
So it's not as simple as they make it sound.
No, not at all.
It's not just throwing money at any cryptocurrency and,
And watching it multiply.
Yeah, and hoping for the best.
Hope is not a strategy.
Okay, good point.
What about this dollar cost averaging? Did they mention that?
Oh, yeah. They suggest that as a way to, mitigate risk.
DCA.
Yeah.
Could be a good approach. I'll give them that.
How does it work?
Well, you invest a fixed amount at regular intervals,
Okay.
no matter the price.
So like $100 in Bitcoin every week.
Yeah, something like that.
Regardless of whether it's up or down.
Exactly.
So you're kind of averaging out your purchase price over time.
Right, reducing the impact of that crazy volatility.
But it's not a guarantee.
No, definitely not a guarantee.
You still need to do your research.
Absolutely.
Understand the market.
Yeah.
The asset you're investing in.
Very important.
Okay, so a measured approach is key.
Key takeaway.
And it sounds like you really need to understand the technology, the market.
It's not just about getting rich quick.
No, it's more complicated than that.
It's about making informed decisions.
Okay, let's shift gears
Sounds good.
from the digital world to something a little more, tangible.
Tangible.
Real estate.
Real estate, the classic.
A podcast, they're big on it,
No, why is that?
They champion it for long-term wealth building and, its potential for appreciation.
Yeah, I mean, historically, real estate's done pretty well.
Right, and they highlight, the passive income possibilities.
Passive income, always a good thing.
Through rental income.
Yeah, makes sense.
They even give an example,
Oh, what's that?
a $200,000 property with a 5% annual appreciation rate could be worth over $231,000 in 3 years.
Not bad.
And if you rent it out, say for $1,500 a month, that's $18,000 per year.
In passive income.
Not
too shabby.
Sounds pretty amazing.
On paper, it does sound appealing.
But are there any downsides?
Well, of course there are downsides.
Okay, lay it on me.
Real estate, it can be lucrative.
Yeah.
But it's not without its, complexities.
Like what?
It's a big financial commitment.
That's true.
You got to think about property taxes, insurance, maintenance costs, the risk of vacancies.
Oh, yeah. What if you can't find a tenant?
Exactly. And then there's the whole, landlord thing.
Not everyone's cut out for that.
Dealing with tenants, property management.
It's not always as passive as it sounds.
Definitely not a walk in the park.
Okay, so real estate investing, it's more than just buying a property and hoping for the best.
You need to be prepared for the responsibilities, the potential challenges that come with it.
Absolutely.
Okay, so it's not all sunshine and rainbows?
No, but it can be a good investment.
If you do it right.
Exactly. And for those who maybe aren't ready to,
to buy a whole property.
They do mention some alternatives.
Oh, what are those?
REITs, real estate investment trusts.
Okay.
And Airbnb rentals.
Airbnb. Yeah, that makes sense.
So REITs let you invest in real estate without actually owning property.
Oh, so you're kind of like buying shares. Yeah, exactly. Shares of companies that own and manage real estate.
Interesting.
And Airbnb, well, that's a more flexible approach to rental income.
Yeah, short-term rentals.
Exactly. So these options, they can be a good starting point for diversifying your real estate portfolio.
Without the full commitment
of traditional property ownership.
So even within real estate, there are, different avenues to explore.
Each with their own pros and cons.
Exactly.
Okay, makes sense.
Now, let's move on, shall we?
Yeah, where to next?
To the backbone of many portfolios.
Oh, you mean stocks?
Stocks, exactly.
All right. The podcast refers to them as the backbone of long-term wealth building.
Yeah, they've got a point.
Emphasizing that historical average growth of the stock market, right?
Around 10% per year, historically.
Right, which is pretty impressive.
It is, but of course, past performance doesn't guarantee future results.
Of course.
That's the disclaimer you always hear.
Right, always important to remember that.
They even name some specific companies.
No, really? Which ones?
They single out Tesla, Apple, Amazon, and NVIDIA.
Big players. For sure.
As, potential winners for 2025.
Interesting picks.
They're all major players in their industries.
Yeah, they're leaders, no doubt.
So, it's not surprising they'd be on their radar.
It makes sense. They're in those growth sectors.
Oh, yeah, like what?
Electric vehicles and AI, consumer technology, e-commerce, cloud computing, semiconductors.
Yeah, all the hot areas.
Exactly. And if those sectors continue to thrive, well, those companies could see some big gains.
Makes sense.
But again, past performance doesn't guarantee future results.
Right. Always got to keep that in mind.
A lot can happen in the business world.
That's for sure.
And investing in individual companies, it always carries some risk.
Okay, so it's not a foolproof strategy?
No, definitely not.
What about dividend stocks?
Oh, yeah, they mentioned those too.
They seem like a great way to, generate passive income.
Yeah, the idea is appealing.
Just by holding on to stocks.
That's the beauty of it, in theory.
So how does it work?
Well, companies like, say, Coca-Cola,
Okay.
Johnson & Johnson.
Big names.
They pay shareholders a a portion of their profits.
Just for holding the stock?
Just for holding the stock.
That's pretty cool.
It is, and it's typically a percentage of the stock price.
Okay.
Often ranging from, 3% to 5% annually.
So on a $1,000 investment, you could potentially earn $30 to $50 per year.
In dividends, yeah, but it's not guaranteed.
Oh, right. There's that word again?
Companies can reduce dividends.
Yeah.
Eliminate them altogether.
If they run into trouble.
Exactly. And the stock price itself can fluctuate.
Right. So even with dividend stocks, there's risk involved.
Always risks.
Okay, what about those S&P 500 ETFs they suggest?
ETFs.
Yeah, exchange-traded funds.
Ah, yes, those are a bit different.
How so?
Well, they're like baskets of stocks.
Baskets?
Yeah, think of it like a pre-made portfolio.
Oh, okay.
They track a specific index.
Like the S&P 500.
Exactly, the S&P 500. That represents 500 of the largest U.S. companies.
So you're kind of investing in the whole market.
In a way, yeah, rather than picking individual stocks.
And that can be a good way to reduce risk, right?
It can. You're spreading your investment across many companies.
So if one company does poorly,
the others can help balance things out.
Okay, so ETFs, they offer a way to participate in the market's growth potential.
Right.
While minimizing the risk of individual stocks.
Exactly. And that can be really appealing.
To who?
To folks who are new to investing.
Okay.
Or who prefer a more hands-off approach.
So less research involved.
Potentially, yeah. But you should still understand what you're investing in.
Always, always.
Absolutely.
All right, so we've covered Bitcoin and Ethereum, real estate, and stocks.
A big three.
Now, on to the final asset class.
Okay, hit me.
The one that got my entrepreneurial senses tingling.
I'm intrigued.
Online businesses.
The land of opportunity.
Right. This is where those get-rich-quick vibes really start to,
to ramp up.
Yeah, ramp up.
I bet.
They emphasize the, potential.
The potential for what?
For high profits, scalability.
Scalability, that's a buzzword.
Right. They're claiming online businesses don't have the same income caps.
As traditional jobs.
As traditional jobs, yeah.
That's the dream they're selling.
It's tempting.
It is tempting.
To dream about, building an online empire.
From your pajamas.
From your pajamas, exactly.
I've been there.
What types of online businesses do they actually recommend?
Well, they highlight 4 main categories.
Okay, what are they?
YouTube channels.
YouTube.
Affiliate websites.
Okay.
E-commerce.
E-commerce, right?
Which they break down further. Drop shipping and print on demand.
Okay.
And digital products.
Digital products like what?
Online courses.
Yeah.
E-books.
Yeah.
AI-generated content.
So basically anything you can sell online.
Pretty much, yeah. And these are, some of the most popular business models out there.
Each with their own, unique opportunities.
And challenges.
Oh, yeah, I'm sure.
They don't shy away from the numbers, though.
What kind of numbers?
Well, they claim a successful YouTube channel could bring in $10,000 a month or more.
Wow.
And a well-run affiliate website could generate $5,000 to $20,000 a month.
In commissions?
In commissions, yeah.
That's a lot of potential income.
It is, but we need to be realistic.
Oh, yeah, for sure.
Building a thriving online business.
Yeah.
It's not a walk in the park.
What are some of the realities?
Well, the online world is incredibly competitive.
Yeah, that's true.
You need to stand out from the crowd.
Right.
Attract an audience.
How do you do that?
Well, you need to create high-quality content.
Content that people actually want.
Exactly. Or products that solve a genuine need. And you got to understand digital marketing.
Yeah.
Branding, audience building.
It's a lot to learn.
It is. And you got to be adaptable, willing to learn and evolve.
Because the online world is always changing.
Constantly changing, yeah.
So it's not just about setting up a website or launching a YouTube channel.
No, it's much more than that.
And waiting for the money to roll in.
You got to put in the work.
Right. So with online businesses, just like any other investment, it's important to be realistic.
Absolutely.
Recognize the potential rewards.
Of course.
But also the very real challenges.
And the hard work involved.
Exactly.
Now, did they mention anything about AI tools?
Oh, yeah. They briefly touch on the use of AI and automation.
Which makes sense.
Yeah. It's becoming more and more prevalent.
Especially in the online business world.
Right. But they didn't go into much detail.
They didn't.
No, not really.
That's probably a whole other deep dive.
A deep dive waiting to happen.
Exactly.
Well, we've covered a lot of ground today.
We have.
Exploring the potential, the promises.
Of these 4 asset classes.
But I have to admit, I'm feeling a little... Overwhelmed.
I'm overwhelmed.
By all the possibilities, all the potential pitfalls.
I get it. It's a lot to take in.
So, Where do we go from here?
Well, I think it's time for a reality check.
A reality check?
Yeah, in the next part of our deep dive, we're going to take a closer look at the risks and challenges.
Oh, good idea.
Associated with each of these asset classes.
Let's do it.
So buckle up.
All right, we're diving into the nitty-gritty.
It's about to get real.
Let's see what we need to be aware of
before jumping into any of these investment opportunities.
Sounds good.
All right, see you next time.
See you then. All right, welcome back, everyone.
Back for more.
We're diving back into those 4 asset classes.
The path to riches, supposedly.
The podcast we're analyzing.
Right.
Touted as, the keys to riches.
By 2025, no less.
By 2025, exactly.
Just touted promises.
Big promises. And last time we explored, the potential.
The upside, the excitement.
The excitement, the shiny side of things.
That's
but
correct.
Now we got to get real.
Time for a dose of reality.
And explore the downsides.
The risks, the potential pitfalls.
The challenges, right.
Got to balance it out.
Exactly. Ready to face the music.
Always.
All right, so let's revisit Bitcoin and Ethereum.
The crypto darlings.
Yeah. While the potential returns are, enticing.
They dangle those big numbers.
They do, but the volatility.
Yes, the volatility.
But the crypto market.
It's a roller coaster.
It's a serious concern.
Prices can swing wildly.
Up and down, yeah.
And there's no guarantee those predictions will come true.
That's what worries me. Like, what if it all comes crashing down?
It's a possibility. You got to be prepared for that.
Right. And they mentioned dollar cost averaging as a way to,
to navigate the volatility.
Yeah, but I'm still a bit wary.
Wary.
It feels like there are so many factors outside our control.
You're right, there are.
That could impact the crypto market.
Like what?
Well, government regulations.
Yes. Regulation.
Technological advancements, public sentiment.
It's a wild west out there.
It really is.
And dollar cost averaging, it can help.
Yeah.
But it's not a magic bullet.
Okay, so crypto, it's a gamble.
It is a high risk, high reward gamble.
And then there are the security risks.
Oh, yeah. Those are real.
Hacks, scams. You hear these stories.
It happens, unfortunately.
It makes me nervous.
You got to be careful out there.
What can you do to protect yourself?
Well, choose reputable exchanges.
Okay.
Use strong passwords, 2-factor authentication.
2-factor, got it.
And be wary of phishing scams.
Right. Don't click on those suspicious links.
Exactly. Education and vigilance are key.
So, crypto, it's exciting.
Yeah.
But it definitely requires a cautious approach.
Absolutely. And a commitment to staying informed.
Okay, let's move on to real estate.
Real estate, more tangible.
Right. It's often seen as a safer investment.
Historically, it's been relatively stable.
But I imagine there are still risks to consider.
Of course, no investment is completely risk-free.
Right. Like, what should we be aware of with real estate?
Well, property values, they can go up and down.
They can. I thought they always went up.
Not always. The market can fluctuate.
I didn't realize that.
And repairs, maintenance costs, those can add up.
Oh, yeah. Unexpected expenses.
Exactly. And then there's the landlord aspect.
Right. Dealing with tenants.
Not everyone's cut out for that.
No, it can be stressful.
Property management, vacancies.
Yeah. That $1,500 a month in rental income.
That they were touting.
It's not a given, is it?
It depends on a lot of factors.
Like what?
Location, property condition, the rental market.
So it's not as simple as they made it sound.
No, there's a lot more to it.
Okay, so real estate, it requires careful planning, research, and a realistic assessment
of the time and effort involved.
Got it. So it's not a passive investment.
Not entirely, no.
All right, let's move on to stocks.
Stocks, the backbone of many portfolios.
Right. They seem relatively straightforward.
They can be, if you understand them.
But I'm sure there are risks there, too.
Of course, the stock market can be volatile.
Volatile? How so?
Prices can go up and down, sometimes dramatically.
Oh, right, like during a recession?
Exactly. Economic factors play a big role.
So even though the market has generally trended upwards...
Over the long term, yes.
There are no guarantees.
None whatsoever.
And what about those specific companies they mentioned?
Tesla, Amazon, Apple, Nvidia...
Yeah, those big names, are they really such sure bets?
Well, they're leaders in their industries, no doubt.
Right.
But even the biggest companies can face challenges.
So their potential might be limited.
It's possible, and new competitors can always emerge.
So investing in individual stocks...
It's always riskier
than a more diversified approach.
That's a key takeaway.
And what about those dividend stocks? They made those sound pretty appealing.
Yeah, the passive income aspect is definitely attractive.
But those dividends aren't guaranteed, right?
You're catching on. They're not.
Companies can reduce them or even eliminate them?
Exactly, if they hit a rough patch.
So even with dividend stocks...
There's risk involved.
Always risk. Okay, I'm starting to get it.
Good, you're learning.
Now, online businesses, I'm still intrigued by the idea.
The entrepreneurial spirit.
Yeah, but after hearing about all these potential pitfalls,
it can be daunting.
I'm also a bit apprehensive.
That's wise. It's good to be cautious.
They made it sound like anyone could just
launch a YouTube channel, make millions.
Yeah, or an affiliate website, and the money would just roll in.
If only it were that easy.
Right. What's the reality?
The reality is it's incredibly competitive.
Yeah, I can imagine.
You got to work hard.
Yeah.
Adapt quickly.
Right.
Constantly learn and evolve.
So it's not for the faint of heart.
Definitely not.
What do you really need to succeed?
Well, a deep understanding of your target audience.
Okay.
A solid marketing strategy.
Right.
And the commitment to providing value.
Value to your customers.
Exactly. Whether it's through content, products, services.
So it's not just about setting up a website and calling it a day.
No, it's much more than that.
Yeah. And with e-commerce, there's all the logistics.
Oh, yeah. Shipping, inventory, customer service.
It's a lot to handle.
It can be overwhelming.
And the competition is fierce.
Very fierce. You got to stand out.
How do you do that?
Unique products, exceptional service, strong branding.
So you got to have a real edge.
You do. And you got to stay on top of trends.
Because the online world is constantly changing.
Constantly evolving.
What about digital products like online courses, ebooks?
Those are good options.
They seem appealing because you don't have to deal with physical inventory.
That's a plus.
But are there still challenges?
Of course. Creating high-quality content.
Content people will pay for.
Exactly. Marketing those products effectively.
Right.
Providing excellent customer support.
So even with digital products, there's work involved.
Always work involved.
Okay, so with online businesses, the potential rewards are high.
It can be, yes.
But so are the risks.
And the workload.
It's not a get-rich-quick scheme.
Definitely not. It takes dedication.
Yeah. Okay, so we've explored the downsides.
The pitfalls, the challenges.
The different 4 asset classes.
We've been through the ringer.
Anything else we should be aware of?
I think the key takeaway is no investment is entirely risk-free.
Right. There's always some level of risk.
Exactly. And each asset class has its own unique risks and rewards.
So there's no magic bullet.
No magic bullet. No.
For getting rich quickly.
Building wealth takes time.
Patience.
A real thought-out strategy.
And a healthy dose of realism.
Yeah, absolutely. Don't let those get-rich-quick promises cloud your judgment.
So what's the bottom line for listeners?
Do your research.
Okay.
Understand your risk tolerance.
Right.
Don't put all your eggs in one basket.
Diversify.
Exactly. And maybe take those podcast predictions with a grain of salt.
Good advice. It's easy to get caught up in the hype.
It is, but a grounded approach is essential.
So we've delved deep into these 4 asset classes.
Bitcoin and Ethereum.
Real estate, stocks.
Online business.
Exploring both the potential and the pitfalls.
The good and the bad.
But there's a whole world of investment possibilities.
Beyond these familiar categories.
Oh, no, I'm intrigued.
In our final segment,
Yeah.
we'll explore some alternative investment strategies.
Alternative strategies, okay?
Some of which might surprise you.
I'm all ears. Let's step outside the box.
Let's see what other treasures we can uncover.
All right, welcome back to our deep dive. It's been quite a journey so far, right?
It has. We've covered a lot of ground.
We've talked Bitcoin, Ethereum, real estate, stocks, even online businesses.
The whole gamut.
The whole gamut. And now, as promised, we're heading into uncharted territory.
Uncharted territory.
Well, sort of. We're going beyond those conventional asset classes.
Oh, okay, I see what you mean.
To explore some alternative investment strategies, stuff you might not hear about every day.
Sounds intriguing.
I think you'll find it interesting.
I'm ready.
Okay, so you mentioned precious metals earlier, like gold and silver.
I asked the classics.
The classics, right?
Yeah.
They've been safe haven assets for centuries. Why is that?
Well, they tend to hold their value pretty well.
Okay.
Especially during times of, economic uncertainty.
Like a recession.
Yeah. Or when inflation's running rampant.
So they're kind of like a hedge against a volatile market.
Exactly. A way to preserve wealth when things get a bit shaky.
Okay, that makes sense.
When investors get nervous about the stock market or the economy, they often turn to gold and silver.
To protect their capital.
Exactly. It's a classic strategy.
But how do you actually invest in them? Do you have to buy gold bars and
store them into your mattress?
Yeah. Or in a vault, like in the movies?
Well, you could, but there are easier ways.
Oh, okay. Like what?
You can invest in gold and silver ETFs.
ETFs. Those baskets of stocks we talked about earlier?
Similar idea, but these ETFs track the price of gold and silver.
Oh, interesting.
It's a more accessible way to invest.
Without having to deal with the actual physical metal.
Exactly.
Okay, that makes sense.
Or you could invest in mining companies.
The companies that produce gold and silver?
Right. So there are options.
So different levels of involvement, different levels of risk.
Exactly. Depends on your comfort level.
What about collectibles? That seems like a very different kind of investment.
It is. It's a whole different world.
Like what kind of collectibles are we talking about?
Everything from vintage toys and comic books to rare art and historical artifacts.
Wow. So anything that's rare and in demand?
And has the potential to appreciate in value over time.
But how do you know what's going to be valuable in the future?
That's the million-dollar question.
Seems like a lot of guesswork.
It's not just guesswork. It takes research and knowledge.
The collectibles market.
Right. You need to understand the history of the items, what drives demand, the trends.
So it's not for the casual investor.
No, you really need to have a passion for it.
And be willing to put in the time.
To learn the ropes.
Okay, so collectibles, they're fascinating.
They can be.
But they require a certain level of expertise.
They do.
I'm noticing a theme here, like all these alternative investments.
Yeah, what's that?
They seem to require more knowledge, more research.
Than the more traditional assets we discussed.
Exactly, like stocks and real estate.
You're right. Diversifying beyond traditional assets can be smart.
But it's not something to jump into blindly.
Exactly. You got to do your homework.
Knowledge is power.
Always.
Okay, what else is out there? What other alternative investments should we explore?
Well, one area that's gaining traction is peer-to-peer lending.
Peer-to-peer lending. I've heard that term.
P2P lending, for short.
P2P lending. Okay.
It's a relatively new way to invest.
How does it work?
Well, it cuts out the traditional financial institutions.
Like banks?
Yeah, banks, credit unions, all that.
So what happens?
P2P lending platforms connect borrowers directly with investors.
Oh, so it's like a marketplace for loans.
Exactly. Investors can choose which loans to fund.
Based on what?
The borrower's profile, the interest rate offered, their own risk tolerance.
And they earn interest on the repayments.
That's the idea.
But what if borrowers default?
That's the risk, of course. But that's where diversification comes in.
So spread the risk.
Exactly. Just like with any investment.
Don't put all your eggs in one basket.
Exactly. Spread your investment across multiple loans.
To minimize your exposure.
Exactly. It's all about managing risk.
So do your research, understand the platform.
And be prepared for some level of risk.
Because there are no guarantees.
Never any guarantees.
Well, this has been fascinating, exploring all these different investment strategies.
I'm glad you found it interesting.
You've really opened my eyes to a whole new world of possibilities.
There's a lot out there beyond the usual stocks and bonds.
But it's clear that knowledge is key.
Absolutely. The more you know, the better equipped you are to make informed decisions.
And that's what it's all about, right?
Making smart choices, managing risk, and hopefully building wealth over time.
And remembering that there's no quick and easy path to riches.
No shortcuts, just smart decisions and patience.
Well said. Well, I think that about wraps up our deep dive for today.
I think so too. We've covered a lot of ground.
We've explored a lot of different investment options, both traditional and alternative.
And hopefully given our listeners some food for thought.
Exactly. So as we sign off, I want to leave everyone with this thought.
Go ahead.
The most valuable investment you can make is in yourself.
Couldn't agree more.
In your knowledge, your education, your skills.
Those are the investments that will pay off for a lifetime.
Absolutely. So keep learning, keep exploring, and never stop seeking new opportunities.
That's the key to success.
And on that note, thanks for joining us on this deep dive.
It's been a pleasure.
Until next time.
Thanks for tuning into our channel Money Minded Online. If you found value in today's episode, don't forget to hit the like button, subscribe, and turn on notifications so you never miss an update. Share this episode with friends who are looking to make money online and join the community. Drop a comment below with your favorite tip or takeaway. We'd love to hear from you. Until next time, keep hustling and making moves. See you in the next episode.